Howdy, y'all. Welcome. It is the weekly wrap-up for December 24th, 2021. It is a Friday. I hope everyone's having a wonderful day. I have my festive Santa hat on since it is Christmas Eve. And I hope everyone is gearing up for a wonderful holiday weekend. So it's a little overcast here in the beautiful state of Colorado. So we're up in the high country. They got a little bit of snow coming their way, unfortunately. Those of us along the Front Range are probably just going to get a few little dustings or whatever. So, which isn't bothering me because I'm taking the fifth wheel out next week, and we'll be down in New Mexico for a few days. So, not having to dig out the tires or anything is really ideal. So, I will be working from while I'm out. So don't worry that you won't be able to reach me. But again, I hope everyone's going to spend the next few days with friends and family, and hopefully forget about all the BS we've been dealing with the last couple of years. So, anyways, all right. Well, let's go ahead and take a peek at how the market has done this week. All righty. So we'll go 1 week. Let's see, the Dow Jones this week. If everyone remembers, the market was closed today. The Dow Jones was up 0.41. S&P 500 was up 1.56. NASDAQ for the week. Looks like it was up about 3.75. The Dow Utilities. Let's see. Looks like they were down slightly, 0.68. And the Dow Transports were up about 1.5%. So it looks like across the board, the one part of the market that has underperformed the rest was the where was it? The utilities, or no, it was the transports. No, it was the utilities were down. So, anyways, so like I said, kind of a slow week in the markets. Things look pretty good. Some things, not so much. But, it's kind of a mixed bag this week. I know I read through an article yesterday that had, kind of the highlights and the lowlights of everything that's gone on the last few months. All righty. So let's go ahead and take a peek at what's going on in the world. All right. As far as statistics, as far as the economy, the U.S. jobless claims, our initial jobless claims came in at 205,000, right on forecast. Last week's numbers were revised down to from 206 to 205, still 5,000 over what the forecast was for last week. But again, still pretty good. If we scroll out or look at this going back to let's see. Yeah, back in March, we were at, 600,000 people applying for new claims. Today, we're down in that 200,000 range, which again, if you remember from previous videos, that's right about on track where we should be, based upon, where the economy is at and, where it was prior to all of this. So, all right. Continuing jobless claims came in at 1,859,000. The forecast was 1,820,000. Last week's numbers were revised up from 1.845 to 1.867. Still below the forecast of last week, but it was revised up. Again, looking back historically, we were, what I would aim for would be about, 1.6 million, 1.7 million continuing claims. And we are getting very, very, very close. So that, again, some positive news out there. GDP came out this week on the 22nd. The actual was 2.3 against a forecast of 2.1. So, again, another positive number that looks pretty solid. So, let's see here. Consumer confidence came in at 115.8. The forecast was 110. As you can see, the last few months, consumer confidence has slowly been creeping back up to where it was, in the summertime. Again, still not quite as high as we were, prior to all this nonsense, but we'll take what we can get. All right. Existing home sales came in at 6.46 million. Forecast was 6.52. So it was off by about, what is that? 60,000. So my apologies. My phone is ringing. All righty. So, and again, still in line with previous months. It appears that the home sales do continue to climb up. So that is some very good news there too. Durable goods orders month over month. The actual came in at 2.5 against a forecast of 1.6%. Again, looks like a pretty good number against the forecast. Let's see here. New home sales came in at 744,000 against a forecast of 770,000. So again, slightly under by about 26,000 homes. But again, it does appear that new home sales and existing home sales still appear fairly strong. I know there is not a lot of inventory on the market. That's probably been the biggest problem over the last couple of years. A big problem of that is, or not a problem, but what has led to that situation is the foreclosure moratorium that was in place for such a long time. That has kept a lot of properties off the market that would normally go into default and foreclosure and would be scooped up by other investors. So, all right. And the last one is consumer sentiment came in at 70.6. Forecast was 70.4. Again, compared to the numbers, up to the end of 2019. Still not very good. I think our highest number was probably in the late spring and has since gone down. There's a lot of contributing factors to, the confidence of the consumer. Inflation has certainly been a big knock on that. Whether or not you think that those in charge in Washington are doing a good job, again, that probably has something to do with it too. All right. Well, I had two articles. First one, again, it's a slow news day, and there's just not a whole lot of news out there in the world. So this first one is from the Washington Post. Amid fears Russia will invade Ukraine, Putin points finger at U.S. and NATO in marathon news conference. So I actually printed this out since it's a little easier for me to read. So, all right. So, that's the wrong one. Let's see here. All right. Russian President Vladimir Putin in a marathon news conference on Thursday blamed the West for tensions on the Ukraine border and fears of war, but stopped short of issuing any pronouncements likely to drive further escalation. One of his most prominent television appearances of the year, the annual conference, which lasted for about 4 hours, was an opportunity for him to convince Russians that Kiev's westward turn is an urgent security threat to Moscow, one that could justify military action. It wasn't just Russia watching closely. Western officials closely monitored the event to glean how Putin would present Russia's saber-rattling and for hints of his intentions. Russia has amassed 100,000 troops along with military hardware on its border with Ukraine, preparing for what U.S. officials have warned could be a full-scale attack, addressing with his domestic audience and maybe the Western one too. Putin said Russia would rather not fight a war and that he would prefer to resolve the tensions through a diplomatic track. Though Putin was given two opportunities to say definitively that Russia would not invade Ukraine, he insisted he instead reiterated his demand for a promise in writing that NATO would not expand eastward. He said the talk of war from a Russian perspective could read as a signal that Kiev, not Moscow, is the side preparing for attack. And we are warned in advance, don't get involved in the middle, don't meddle, don't defend these people, he said, referring to the Russia-backed separatist territories in eastern Ukraine. If you defend, these sanctions will follow. So, I mean, it appears there's a lot of, rumbling around that, we potentially could be heading towards some sort of escalation in Ukraine. With all the discontent here in the United States, I wouldn't be shocked. There's nothing like a good war to, boost the economy because, all that military spending and also all of the, it simply would just remove the distraction of all the problems here in the United States. So we'll see where this goes. Was there anything else that was of interest here? So let's see. The senior official warned that if Moscow were to proceed with an invasion, the United States would provide more support to Ukrainian forces, underscoring that military aid Washington is giving Kiev is defensive in nature, not systems that would allow Ukraine to threaten Russia in any meaningful sense. It's clear that if Russia goes ahead with what may be underway, we and our allies are prepared to impose severe costs that would damage Russia's economy and bring about exactly what it does not want: more NATO capabilities, not less, closer to Russia, not further away, the senior official said. So, yeah, Ukraine and Russia are not America's problem. I honestly don't think that Russia is really any sort of an issue for the United States at all. But hey, what do I know? I'm just some random dipshit sitting here on the Front Range of Colorado. So, all right. And one more article I did want to go through. This was from the Wall Street Journal. Consumer spending rose at a cooler pace in November. All right. So let's go ahead and hit some of the highlights here. Let's see. Consumer spending rose more slowly in November, raising risks of broader economic slowdown amid the latest wave of COVID-19 cases. U.S. consumer spending rose 0.6 last month after climbing 1.4 in October. The Commerce Department reported Thursday. Holiday shoppers snatched up gifts earlier than usual this year in anticipation of product shortages, helping boost spending in October while contributing to a November sales decline. I think we talked a little bit about that yesterday. Let's see. We are still on track for a very strong fourth quarter consumption, but I'm now seeing that momentum continues to fade, said Anita Markowska, chief economist at Jefferies LLC. Let's see. Ms. Markowska and other economists expect the highly contagious Omicron variant of the COVID-19 to be a temporary drag on economic growth. Some economists are lowering their growth projections for early 2022 due to growing concerns about the latest surges in cases. So I think this is going to be a giant nothing burger with the whole Omicron. I mean, looking at the statistics out of South Africa, yes, there was a large jump in cases. But, again, it doesn't really necessarily say if the cases were people who were sick or just people who tested positive. So we will see. And if my dogs jump up in a second, my wife just drove up the driveway and they will probably be freaking out in a second. So I apologize for any noise in advance. And there goes Jake. Let me mute this for a second. I'm going to go shut the door. Hold on. Nothing like puppies to let you know that someone's on your property. All right, where was I? The economy is further in the reopening process. Let's see here. All right. David Esguerra, a 35-year-old from Phoenix, said he has seen prices rise rapidly. Pet grooming services, including a bath and nail trimming for his terrier, Mixie Sophie, have shot up about $80 from $60 last year. Croissants at the farmer's market cost roughly $6 this year, up from $4 in 2020, he said. The supply chain engineer's pay raise this year was below the rate of inflation. As a result, he has adjusted his spending habits. For instance, he sought out furniture on secondhand markets like Craigslist to outfit his new home, and he's cutting back on purchases of clothes, shoes, and phone accessories. Mr. Esguerra isn't overly concerned about his ability to afford daily necessities in the short term. He worries, though, about whether this bout of inflation will last. My concern is more about the long term, how it's going to affect my financial future, he said. Is inflation going to stay high? So, again, these are all problems we are all worried about right now. So, anyways, all right, let me go ahead and take that off the screen. Well, like I said, I hope everyone is having a wonderful Christmas season, and I'll be back on Monday with the weekly economic update, maybe a little later into the day because I'm going to be traveling in the afternoon. But I will do my best to get that out to everybody. And again, I want to wish everyone a Merry Christmas, Happy New Year, and like I said, well, like I should have said at the beginning, if you haven't, if it's your first time watching, be sure to like, subscribe, and share. And I'll be back next week. Have a great day. Bye-bye.